Whenever a company is doing an IPO and the purpose or the reason for the IPO is offer for sale portion, like giving an exit to the existing shareholders, especially private equity guys, and very little money being, raised for expansion, that's a sign that, it's just earlier investors or private equity guys who now want an exit. They're the ones paying the investment bankers, they're the ones paying lawyers like us, they're the ones paying chartered accountants and auditors. So the whole deal team is being paid by the company. Naturally, the entire IPO document, sales effort, everything would be skewed in favor of the company because they want to give an exit to the private equity guys and the initial investors. So as one of the things that I look at, and this may well be a point of where I do consider investing in IPOs. So if I see that there's no offer for sale, and if there's only fresh issue and capital being raised for genuine expansion plans, there's a chapter in the RHP or DRHP which is called objects of the issue. So if you go there, you'll see exactly what the company plans to do with the money that they raise, and there's a committee which looks at that for the next 6 months, or in fact now I think the time has been extended for a long time to see if the company is actually using the money for that. But if you look at the objects of the issue and figure out why the company is raising the money and what they need it for, if it's a very genuine case of expansion, which you'll get to know if they're setting up a new plant or a new factory or something which is very capital intensive, that's when I'm more inclined to read further. And the second thing I look at is if the valuations are justified